So foreclosures are up almost 7x, almost 700%. How is that possible? How is that happening in this market where everyone wants the house, everyone wants to pay over asking, everyone wants to go in with their eyes closed and blind and just buy any property that they can get their hands on? How is that possible? And do we see any signs that this is going to be a continued trend in the market? Well, of course we do. And I got the information for you. My name is Orlando. Welcome to my channel. Let's jump right into it so we can see that foreclosures are up. And let's jump into this article here where it says, January 2022 saw a massive jump in the number of foreclosures started, a 700 year-over-year increase according to Black Knight. Rising foreclosure rates aren't great news for the housing market because they could be an indicator of distress. Really? I don't know. How could that be? Foreclosures jumping up by 700% could be a sign. I don't know, guys. You know, a lot of this stuff seems like common sense stuff, but you know, I understand that some people just don't understand it like I do. So let's break this down. If you see a big rise in foreclosures, then you can bet your bottom dollar that there's something underneath that is making individuals go into foreclosures. And you have to find out what that disease is. What is the underlying reason why people can't afford their mortgages anymore? But I have a sneaky suspicion it probably has something to do with people taking ARMs rather than fixed rates. Or how about buying houses that are overpriced? That could be the case, but let's continue on. Foreclosure filings are continuing to rise month over month, with February 2022 seeing 25,833 new foreclosures, 11% increase from January 2022. Woo! Which is welcome news for distressed real estate investors. Now, guys, listen, the biggest thing about this is that we have all of these signs. You know, a lot of, people say red flag, red flag. This is a red flag for sure. But let's jump into some other data that you could possibly, that maybe I could change your mind on this, that the market isn't as strong as you think it is, that there is going to be a downturn, that the housing market will slow down. Maybe I could change your mind on this, but let's look at some actual data here. Okay, so let's look at this. Lumber. Remember lumber was like ridiculously high? Well, lumber prices are falling 22% in March as housing market cools on soaring mortgage rates. Now remember, guys, if you go back to back, look at my videos, one of the biggest things that I was saying is that we have to wait until mortgage rates increase. When mortgage rates increase, we'll see what the real is, right? We'll see exactly what's going to happen in this housing market. And a lot of people are like, no, Orlando, mortgage rates, they won't matter. But let me tell you, I'm in the industry and I know mortgage rates matter, especially to new home buyers. That is something that they will say, you know what? I don't need this house, or I can't buy the biggest house that I want. You know what? I don't want to be in the market anymore. That is possible. Our sellers finding out, you know what? I could have sold my house for $150,000 overpriced, but now that the market's cool, I'm not going to sell my house now. I prefer just to stay in it because I can't make a killing off of it now. I was trying to let individuals know that this is something that you have to look at and is in a very, very very important to look at. Lumber prices have fallen 22% from the early March peak as housing market shows signs of cooling off. New home sales fell for the second straight month in February, dropping 2% to a seasonal adjusted annual rate, 772 units. See, it's slowing down. It's not just something that's just gonna be like, boom, all of a sudden everything's nuclear and everything's just gonna change overnight. It's something that we see happen tier under tier under tier, plan after plan. It comes in rounds and cycles, guys. Borrowing costs have surged as Fed tightening has sent the 30-year fixed mortgage rate to 4.7%. Let's say that again. 4.7%, guys. That is quite different than the 2.68% that we were looking at a year ago. A year ago, guys. 2.68 to 4.7. And that was, the Fed just increased it very small. We're talking 0.25%, and the rate skyrocketed to 4.7. Now, what do you think is going to happen when the Fed decides, coming up in May, that it's going to be more aggressive this time, and it does a 0.75% increase? Get ready for rates that are in the sixes. Get ready for rates that are in the sixes. High fives, low sixes. Now, I know what you're thinking. You're thinking, Orlando, hey, that was only two things you showed me. You showed me lumber is going down in price. Who cares? You showed me mortgage rates are getting so high that people are taking, ARM over fixed rates. Orlando, that's not enough info. Well, let's go into something else that hopefully maybe I can change your mind and your view set on, what's going to happen in this market. So let's look at this article where we have an analyst talking about the housing boom loses steam. Home sales may drop 25% by the end of summer, says analyst. The housing market is in the early stage of a substantial downshift in activity, which will trigger a steep decline in the rate of increase of home prices, starting perhaps as soon as spring. Now, here is my theory, guys. I think that rates are going to go so high, or for individuals, it's going to seem very high, that it will not only make individuals not want to apply for a home because, for one, they won't be able to get the size of house that they want. They won't be able to afford the type of house that they want. But they do not want to pay large amounts of money, monthly payments and interest on a home. So I think that will stop a lot of people. But I think on the seller side, we will see individuals decide, you know what, I don't want to sell my home because I'm not going to make a lot of money. If there is a decline in demand for homes, then that means sellers can't, get that nice, cushy $100,000 overpaid premium that they're looking for, or that $50,000 or $60,000 overpayment that they would normally get. So in that case, a seller may think to themselves, you know what, I don't want to sell. I'll just stick it out and do what I normally do. It's not attractive to me anymore. So you can see people pulling their houses off the market because of that, which then again, some people would say to me, well, Orlando, that still is a supply issue. But this is the thing, the supply, even though it's there, demand will be low. The demand will be lower than it was before, and prices will continue to trickle down. We will then go into a recession. Then at that recession point, we will then see everything dip. It's a cycle. It's not something that, I would never wish and hope that that does happen, of course, but I can see it coming ahead of me. The signs are there. The reason why I'm giving you this information is I want you to be ready for it. I want you to know that it's a possibility that can happen. Nothing is a guarantee, but if you see all of these signs lining up like a domino effect, you can't be surprised when it does happen because you saw all of the signs, but you just ignored them. And if you ignore something and it jumps up on you, then whose fault is that? Was it really a surprise? Was it really? And then hey, look, I'm only the messenger, right? And I just want to show you this last piece of information that will hopefully open your eyes to understanding that this type of growth, it just cannot continue. It cannot continue. I mean, hey, if you're a seller, if you are an owner of a home, you would want this to continue, but you have to know this can't continue. Let's look at Zillow's data that they have on February's growth. We have the numbers in February. I want to really hone in on this. Change in typical home value from last year, 32.4%. Is it that Crazy. Do you think we can continue on this growth path? It is insane. If we continue on this path, the whole nation is going to be California. It's going to be California. Do we all want to live in California and have prices where you can't afford? No, no, no. If we continue with this, it's going to be California. You know what? That is a good point that I just made to myself as I was talking. I'm pretty sure if we go to California, then I can promise you that there's probably some despair in that. I'm going to do a video on it. I think I'm going to do a video on how the housing market looks in California. And just without even looking at it, I can understand if it grew 32% here, what does that 32% look in California at an already ridiculously high priced area? It's very unaffordable. Very unaffordable. But anyway, guys, I hope you got value out of this content. Hopefully I changed your mind, or I opened your mind on the possibility that things are not going in the direction that people are saying, as far as prices continuing to rise and there won't be any recession or crash or anything. Hopefully, when you look at all of these, it gives you some ideas of what you can do to prepare yourself, what you can do to further yourself when you're going to buy a home, when you're not going to buy a home. Hopefully this has given you all the ammo and information that you need to move on to that next step. And once again, this isn't a doom and gloom video. This is a video to give you as much information as you need to make a sound decision. So I need you to watch this next video here. It will help you learn everything about the housing market, everything about real estate, getting into your first rental property, and also check out our membership program. It's in the description. I'll see you guys in the next one. Thanks.